Hey guys, so today I want to talk about an important topic in regards to why banks are losing billions in regards to bond investments due to high interest rates and inflation, okay? So I see a lot of crypto YouTubers talking about these things, but they do not explain to the audience what a bond is. And me personally, I thought I knew what a bond was until I started to research this topic deeper, okay? Because my understanding was false. Now, before we get into the numbers here of why banks are losing a lot of money, let's take a look real quick in regard to what bonds are.
Essentially, bonds are used to borrow money. For example, governments use bonds to borrow money to pay for schools, roads, and other infrastructure. War can also create a sudden need for funds. There are basically four primary categories of bonds sold in the markets: corporate bonds issued by companies, municipal bonds issued by states and municipalities, government bonds issued by the U.S. Treasury, and agency bonds issued by government-affiliated organizations such as Fannie Mae. For investors, bonds are thought of as fixed income instruments because they typically pay a fixed interest rate, or coupon rate, to bondholders, although bonds with variable interest rates are also common. Most bonds share common characteristics. The issue price is the price at which the bond issuer originally sells the bond. The face value is the amount the bond will be worth at maturity. The coupon rate is the percentage of interest the issuer will pay on the bond. The coupon date is the date on which the issuer will make interest payments. And the maturity date is when the bond matures and the issuer pays the bond's face value. The bond market also tends to move inversely with interest rates. So bonds will trade at a discount when interest rates rise and at a higher price when interest rates fall. In short, a bond could be thought of as an IOU between the lender and borrower that includes the details of the loan and its payments.
Okay, guys, so now that we know what a bond is, let's get it, okay? So $40 billion in unrealized losses hits JP Morgan Chase as Bank of America, Wells Fargo, and Citigroup face exposures to U.S. Treasuries, okay? Now, the banking giant, JP Morgan Chase, is now stuck with roughly $40 billion in unrealized bond losses as of Q3 of this year, which is a 20% rise over the previous quarter, reports Barron's, okay? What does this mean? The best way to think of it is like this, guys. Imagine you put $100 into a Ish coin. Let's call it Ish, okay? You invest $100 into Ish, then Ish goes down to $50, okay? So what does that mean? It means that you've got 50% of unrealized losses. It's unrealized because you haven't cashed out yet. Now, if you cashed out, then it's a realized loss, meaning that you only got half your money back. But since you haven't cashed out, it's an unrealized loss, okay? So keep that in mind. So the new numbers were located in a footnote on the firm's third quarter financial supplement and were higher than an expected $34 billion loss. So what that means is they had it in a tiny note somewhere on a report that they probably didn't want people to see, okay? So the news follows a new quarterly report from Bank of America revealing it now has a total of $131.6 billion in unrealized losses. Now, Wells Fargo and Citigroup also reported third quarter earnings that they've yet to reveal the latest status on their unrealized losses, okay? So why is this important? Why does this matter? Well, it matters a lot, guys, because as mentioned, the reason why these bonds are losing money is because when the Fed raises interest rates, this is what these banks are dealing with, okay? And number two, inflation also minimizes the return of bonds, okay? So for example, let's say you're earning 5% a year in your fixed income portfolio and inflation is running at 6%, you're losing money. It's as simple as that. Why? Because the inflation is more than the fixed income that you're getting on your bond, okay? Now this is very important, guys. There has been a lot of news recently regarding some other issues banks are having that I talked about on Patreon, okay? And really, guys, 2024, it would not shock me if there are more bank failures. There is a bank that recently went insolvent, okay? Bank, which is a bank located out of Iowa, was closed just on Friday, and you didn't hear it through the MSM, mainstream media news, okay? Now, this is a smaller bank, but regardless, the bank closed due to having bad loans or suffering heavy losses on loans, okay? Now, I'm not saying that it's because of bonds. That's not what I'm saying, but they got closed. Now, this is a bank that roughly had a little over 60 million in total assets, and now this bank is kaput, is finished, okay? So guys, what does this mean? Well, what it means, first of all, is now that there are a lot of people who, if they wanted to get their money out, they probably can't until the FDIC really helps out with that situation, okay? Now, last time I checked, this particular bank was insured up to 14.8 million. So that's a big difference from the supposed 60 million they have in assets in regards to covering the total funds or their customers. Now, will the FDIC do it? Time will tell. It wouldn't shock me if they do, okay? So guys, what people have to realize is with banks suffering heavy losses on bonds, and also you have banks that are suffering losses on loans. What does this mean in regards to the banking ecosystem or structure in 2024? All right. I'm not here to fearmonger, guys. That's not what I'm doing. But all I'm saying is pay attention to what's going on with the banks, because there's a lot going on with the banks. And the mainstream media, aka MSM, is putting Jada Pinkett Smith all in your face for a week and a half straight, right? They putting Jada Pinkett Smith all in your face. And I've got nothing against Jada. I don't know the lady. But the reality is when this is happening, where you have a bank that's failing and, you know, the big media outlets are not reporting this, that most of the news can be found on x.com, shout out to Twitter, and that you can't find it through your, mainstream media outlets, that is raising a red flag to me, okay? Anyway, once again, guys, I'm just here to give you some infotainment, give you some information, so that way you understand these things that are going on, because 2024, brace yourself. I do think that we're going to see more situations happening in regards to banks. Anyways, your boy, I'm out. Peace.